We've just had AMD's financial results made public a couple of days ago. Pretty impressive numbers. What's your minimum specification? So similar to how we went through Intel's results a few days ago, we're going to go through AMD's financial results for Q3 2020 as well. By contrast to Intel, where a couple of numbers of theirs were down, AMD's numbers look good. We also had the announcement of AMD purchasing FPGA maker Xilinx, so we'll cover a bit of that as well. If we just look over the basic financial results of AMD, then we get this picture. Financial summary of Q3 2020, quarterly revenue up $2.8 billion. So this is up 56% year on year. So that's comparing Q3 2019 to Q3 2020, and then up 45% quarter on quarter compared to Q2. Compared to Intel's numbers, these are obviously a fraction of that, but this is still really impressive as a percentage of the company growth. It says here, growth is driven by high revenue in both the enterprise embedded and semi-custom. So that's the custom CPU, APU division, so that will cover in consoles and anything special they're doing on the enterprise side. But also the computing and graphics segments, so that's, Ryzen and Radeon there. Gross margin of 44%, which is up 1% year on year. That's driven by EPYC and Ryzen processor sales. These are all, Zen 2 stuff. Flat quarter on quarter as an increase in Ryzen and EPYC processor sales was offset by a higher percentage of semi-custom revenue. So this means the gross margin is flat because typically semi-custom revenue from console processor sales is actually a lower gross margin business than the standard consumer and enterprise sales. Operating expenses of $781 million. This has actually gone up quite a lot. We'll go into that later. OPEX of $706 million. Strong profitability. Gross profit of $1.23 billion. Operating income of $449 million, which means an operating margin of 16%, or a non-GAAP operating margin of 19%. Net income of $390 million, and earnings per share of 32 cents. Cash equivalents, and short-term investments of $1.7 billion. Which again, kind of sounds fractional compared to Intel, what we did a few days ago. And operating cash flow of $339 million, free cash flow of $265 million. It's not mentioned here, but we'll go into also AMD's paying down a good amount of its debt as well. So here are the numbers. AMD reports third quarter 2020 financial results. So this is the actual press release, rather than say an infographic, where we're going to get quite a lot of the same numbers. So you see here, revenue is up 56% year on year and 45% quarter on quarter. Gross profit, so $1.23 billion, up 58%. Gross margin, 44%, up 1% year on year. Operating expenses, so expenditure, up 32%. Operating income, however, is up 141%. This is a good number to have. And then net income, up 225%. Earnings per share, up for investors, up 191%. So we're going to have some quotes here. Our business accelerated in the third quarter. A strong demand for our PC, gaming, and data center products drove record quarterly revenue, said Dr. Lisa Su, President and CEO. Normally the third quarter is kind of a low point for a lot of these companies in the industry, so to have a really strong third quarter is a plus. It'd be a bit weird, though, if your third quarter was your best quarter of the year. We reported our fourth straight quarter with greater than 25% year-on-year revenue growth, highlighting our significant customer momentum. We are well positioned to continue delivering best-in-class growth, and we further extend our leadership product portfolio with launches of next-generation Ryzen, Radeon, and EPYC processors, so Zen 3 and the RX6000 family. So again, results, $2.8 billion, up 56% year-on-year. Gross margin. And as we said, gross margin was flat quarter-over-quarter due to this mix of semi-custom, which is a lower gross margin product. Operating income, net income, earnings per share, cash and cash equivalents. So quarterly financial segment summary. So this is where we go into all the different parts of the business. Computing and graphics segment, so Ryzen and Radeon, really should say Ryzen and Radeon. Revenue was $1.67 billion. if you think how many Ryzen processor sales and graphics cards that might be, divide by number, and you might get an estimate of units. Up 31% year-over-year and 22% quarter-over-quarter. Revenue was higher year-over-year, driven by a significant increase in processor sales, partly offset by lower graphics revenue. So, because AMD hasn't started selling RX6000 series, lower graphics revenue, just because, well, not only that, but also Nvidia is now selling their latest generation if you can get hold of one. Revenue was higher quarter-over-quarter, driven by a significant increase in Ryzen processor sales and increase in graphics revenue. So, lower graphics revenue, increase in graphics revenue. Oh, this is year-over-year versus quarter-over-quarter, okay. So, even quarter-over-quarter, they still had an increase of graphics revenue compared to Q2. Client processor average selling price was lower year-over-year due to a higher mix of mobile processor sales. Ryzen Mobile 4000 series came out beginning of the year, is now starting to ramp up, so we're starting to see that selling price come in. Client processor average selling price was higher quarter-over-quarter, driven by higher desktop and mobile processor ASPs. So this time, quarter-over-quarter, mobile processor ASPs. Okay, so still quarter-over-quarter, they're getting... they're selling more of the higher end mobile processors, and then still, high end Zen 2 desktop. GPU average selling price was lower year-over-year due to product cycle timing. With Radeon RX6000, we'll see some of that revenue in Q4. Operating income was $384 million compared to $179 million a year ago, and $200 million in the prior quarter. The year-over-year and quarter-over-quarter increases were driven by higher Ryzen revenue. Ryzen processors. Enterprise, embedded, and semi-custom. So this is normally called EESC. We'll probably shorten that for the rest of the video. Revenue was $1.13 billion, up 116% year-over-year and 101% quarter-over-quarter, due to semi-custom product sales and increased EPYC processor sales. So this is the increase of the Rome EPYCs, but also we're starting to see revenue generation coming from Sony and Microsoft for the consoles. All other operating loss was $76 million compared to operating losses of $54 million and $60 million in the prior quarter. This tends to go kind of in line with how the revenue is doing anyway. So highlights. Introduction of Ryzen 5000 series desktop processors powered by new Zen 3. Supposed 19% raw IPC uplift. And we'll see those come to market November 5th. AMD EPYC, this will be Rome processor adoption, continues to grow as data center customers harness performance and features. EPYC processors now being used by the Azure Data Explorer data analytics platform. Oracle announced cloud instances based on Milan. New instances available on EPYC, including Amazon, Google Cloud Confidential VMs, Microsoft Azure VMs. So, by contrast to Intel's financial results, where they only kind of mentioned Oracle in terms of hyperscalers, AMD's trying to mention all the hyperscalers that they work with that want to start talking. So, also virtualization support from VMware and Nutanix. VMware support for secure encrypted virtualization. And then Northern Data is leveraging EPYC and Radeon Instinct, the Radeon GPUs processors, for GPU-based distributed computing clusters across Scandinavia and Canada. AMD expanded its position in consumer and commercial client. So this is consumer, me, you and me, and commercial client. This is when a company buys 30,000 units for their workforce every few years. OEM partners continue to launch new AMD-powered notebooks, desktops, and Chromebooks, including the first Zen-based Chromebooks. I have a feeling Chromebooks is a low-margin business anyway, but it helps, bring out margins and brings out market share and stuff like that. AMD announced new Ryzen 4000 series desktop processors, the Radeon Graphics. These are the 4000 series APUs that are for OEMs only right now. I still think they're going to be OEM only ever. 3000 series desktop processors with Radeon Graphics for the consumer market, as well as Ryzen Pro 4000 and Ryzen Pro 3000 for the commercials. AMD and Apple announced the availability of Radeon Pro 5000 series GPUs for the updated 27-inch iMac. One of the reasons for any movement in kind of the commercial graphics revenue is going to be because of AMD and Apple's involvement. AMD announced additional high-performance technology contributions to assist against the global pandemic. So we're seeing a lot of news recently. Every time AMD gets installed in a localized supercomputer, such as the Cambridge one in the UK, there was one in Scandinavia, and another one in Australia announced recently. They're just racking up these wins to, produce the marketing materials that also help expand, the visibility of AMD's products in a very Intel and Nvidia dominated market. So outlook, based on current expectations, cautionary statements, the usual stuff. Q4 of 2020, AMD expects revenue to be approximately $3 billion, which would, up from $2.8 billion. So that'd be 41% year on year, 7% sequentially. Primarily driven on the ramp of the new Ryzen 5000 series, EPYC. We might see more of that later, and semi-custom products, so consoles, and growing customer momentum. Gross margin to be approximately 45%, which is the same, I think. AMD now expects 2020 revenue to grow approximately 41% compared to 2019, up from the prior guidance of 32%. So if you guide for 32% and you deliver 41%, that's pretty impressive. And then we get into some more details. So moving on to the acquisition of Xilinx. This has been talked about rumor mill for couple of weeks, but in terms of it being an actual thing, probably a couple of years. I mean, it was kind of, or maybe even 5 years, ever since Intel bought Altera. It's been a kind of thing of, well, when will AMD purchase Xilinx and we get these, having two FPGA behemoths, and then we have two CPU plus FPGA behemoths. It's going to be interesting. So just the high level marketing messages are leadership products, broadest high performance and adaptive computing. So AMD with the high performance, Xilinx with the high performance and adaptive computing. Product diversity provides access to new margin accretive markets. So these are markets that will help improve AMD's gross margin. I think the numbers here we'll see, Xilinx has a very good gross margin compared to AMD, but obviously revenue is a bit lower. And then financial strength, immediately accretive to AMD's margins, EPS, and free cash flow. Our acquisition of Xilinx marks the next leg in our journey to establish AMD as the industry's high-performance computing leader and partner of choice for the largest and most important technology companies in the world. So, important thing here is that this is an all-stock transaction, so there's no actual money changing hands here. Everybody who owned Xilinx stock before is going to have that stock changed to AMD stock. I believe it's at the rate of about 1.7. Every Xilinx share gets you 1.7 AMD shares. Overall, this means that the value of the transaction at, I think the prices were closed on, based on October 8th and the 2 weeks before that, at $35 billion. So what you'll see now is Xilinx and AMD's stock prices will kind of adjust to sync to that 1.7 share level, and between now and the expected close of this deal, they'll kind of just follow the same sort of pattern. Obviously, when you do these sort of mergers and acquisitions, you're paying a premium. So despite the value of the purchase being $35 billion, it won't actually be adding $35 billion of value to the combined company. It'll be less than that, and the idea is, you're generating income to eventually pay off the purchase and just grow value in the company. Total number of engineers between the two companies is 13,000. Now, in our last financial video with Intel, we noted that Intel has over 130,000 employees, something like that, and AMD only has 11,000. Now, obviously, not all of those are engineers, but if you add AMD's engineers to Xilinx's engineers, you get 13,000. And then leadership obviously do with the deal. You've got Lisa, CEO of AMD, Devinder Kumar, who's a chief financial officer, and Victor Peng, excuse me, who is CEO of Xilinx. He will actually come into AMD and be the leader of, the Xilinx division, but he will be given the title of AMD president as well. So they're saying that this will increase the total addressable market of the combined company will be now 110 billion, whereas I believe before it was 80 billion. I think we'll see these numbers soon. So with these financials, obviously they have prepared remarks. This is what they say to the financial analysts on the public call. And just like we did with the Intel financials, we're going to go through over what Lisa says here, along with Devinder Kumar, the CFO, and Victor Peng of Xilinx. So a lot of these numbers we'll see before. Lisa says, today marks a significant milestone in our journey to establish AMD as the industry's high-performance computing leader. Before going into details about Xilinx, let's start with financials. Business accelerated in the third quarter, resulting in record quarterly revenue, with net income and EPS more than doubling year over year. Revenue grew 56% year over year to 2.8 billion. Strong demand for Ryzen, EPYC, and semi-custom. In the computing graphics segment, third quarter revenue of 1.67 billion grew 31% year over year, with higher Ryzen processor sales offset lower graphics sales. Client processor business is performing extremely well. Desktop and notebook processor ASPs increased, and total unit shipments grew by a strong double-digit percentage, both year-on-year and a sequential basis. So not only are the average selling prices higher, but they're also shipping more of them, so compound effect there. As a result, we set a record for quarterly client processor revenue and believe we gained client CPU share for the 12th straight quarter. For market shares, AMD typically goes by the Mercury Research numbers. In mobile, we set records for both quarterly notebook processor unit shipments and revenue, as OEM sell-through doubled year over year. AMD believes they have the strongest notebook processor portfolio in their history. And based on what we've tested with the Ryzen 4000 mobile, it's a very compelling product in the market, and it puts AMD right where they need to be. So there are more than 105 AMD-based notebooks that have launched in 2020. Just to clarify, those are not all Ryzen Mobile 4000. Some companies are still launching Ryzen Mobile 3000 parts, like Honor with the Magic Book, which I have over there and I still need to review. AMD's expanding presence in segments like gaming, commercial and education, where we have traditionally been underrepresented. So commercial and education, when you break in there, there's a lot of volume with contracts. Again, like I say, if you get signed up by a company, you could instantly get 30,000 sales in there for their workforce. In commercial, the number of AMD-based business notebooks for major OEMs has doubled year over year. So major OEMs are getting more comfortable with AMD's business portfolio. And we are building significant momentum based on superior performance and battery life of Ryzen Pro. Progress in the third quarter was highlighted by winning multiple large-scale deployments with Fortune 1000. It's funny that they say Fortune 1000 rather than 250 or 500. It just goes to show how much more AMD has to grow there. In also automotive, I think there should be a comment here, automotive, banking, and pharmaceutical companies. Earlier this month, we announced our upcoming Ryzen desktop processors will be the first to feature our newest Zen 3 core, so that's Ryzen 5000 series. I'm incredibly proud of what our CPU team has achieved with Zen 3. We have significantly enhanced nearly every aspect of our core to deliver a 19% increase in IPC compared to Zen 2. As a result, our new processors delivered absolute performance leadership across gaming, productivity, and creative workloads. These processors still to be tested and reviewed, and are positioned to drive the biggest shift in the PC landscape since we launched the original Ryzen processor in 2017. Excuse me. My fancy hot chips bottle. In graphics, revenue declined year over year and increased sequentially as we prepared for a launch for next-generation Radeon GPUs, again RX6000 series with Big Navi. Mobile GPUs sales grew by double-digit percentage year over year, led by solid demand of the Apple MacBook Pro sales. We're excited about our RDNA 2 graphics architecture launching later this week. I'm recording this, I actually just launched it today. That delivers significant generational increases, 50% plus in both performance and performance per watt. Performance per watt is 50 plus. Our next generation Radeon RX6000 graphics card powered by RDNA 2 are by far the most powerful gaming GPUs we have ever built, and return AMD to the high end of the graphics market. Based on numbers AMD presented, yes, they are back in the high end graphics market. Still a few questions because they weren't clear on a few things, but we'll see when those come to market and reviews come out. Data center GPU revenue increased sequentially and year over year based on new cloud-based visual computing wins. AMD hasn't announced any new data center GPUs yet, so stay tuned for that. Supercomputing is just around the corner. Our Radeon Instinct accelerators continued gaining momentum in the HPC market, announced wins including Australia, as well as a new Lumi supercomputer in Finland, and that's expected 550 petaflops of peak performance. Quite substantial. That's going to be quite high in the top 500. Turning to enterprise and EESC, revenue of $1.13 billion, increased 160% year over year, driven by strong growth in both semi-custom and server processor sales. Semi-custom, ramping production shipments, next generation game consoles. You may have seen a lot of people, a lot of reviewers already have their next generation consoles and seem to be testing them. So AMD's certainly well ahead of the shipments. And we now expect semi-custom shipments and revenue to increase sequentially in the fourth quarter based on strong demand. This will be a quirk of the once every 7 years when we get a new console sales. Turning to server, we set record quarterly server processor revenue as sales grew a double-digit percentage sequentially and more than doubled year over year, driven by growing cloud and enterprise adoption. AMD announced that they hit 10% server market share, again by Mercury Research, in the middle of the year. In their previous quarterly results. So big questions about where that's going. And one of the questions in the Q&A section with the analysts actually asked about the next 10% growth, so we'll cover that as well. In cloud, largest hyperscale customers expanded their second-gen EPYC Rome processor deployments across internal infrastructures and publicly available instances. This is important. Obviously, internal infrastructure, one of the biggest customers Google has for its platform is Google itself. So if Google's deploying, EPYC and Rome in there, then that's going to be a sizable growth. Sizable amount of sales even. In the third quarter, Azure expanded AMD offerings to 18 regions and 9 availability zones. New data analytics services that deliver 30% better performance than competitive offerings. Amazon rolled out new instances, and Google announced cloud confidential virtual machines powered exclusively by second-gen EPYC. And then, data center adoption as well. Added multiple Fortune 1000 customer wins, including financial services, automotive, and EDA, so it's design tools for designing chips, based on performance and TCO advantages of EPYC processors. EDA is quite substantial in the Xeon side, so having some EPYC wins on EDA is actually quite impressive. We're on track to begin volume shipments of our next generation Milan with Zen 3 to select HPC customers this quarter. We expect Tier 1 OEM platform availability to follow in first quarter of 2021. Okay, so that confirms it. We won't see any Milan benchmarking probably this year, though going into next year. And don't forget also Intel's promised more general availability kind of end of Q1, Q2 in 2021 as well. So it's going to be fun when we get Milan and Ice Lake playing off. Place your bets on who will win that. We are seeing hyperscale HPC and OEM customers engage deeper and broader for Milan than they did in the prior launch. We believe we are well positioned to continue share gains based on expanding cloud environments, strong supercomputers, and more than 100 new or refreshed Milan platforms in development. So when AMD launched Rome, their previous generation, I remember interviewing Forrest Norrod, who's head of the enterprise division, and I told him that I'd heard rumors that AMD didn't have enough staff to satisfy the need of their partners to help develop Rome platforms, and he said that they actually had to turn half of the half of the proposed systems away, just because they wanted to dedicate time to the high performance platforms that scaled everywhere. I understand is that AMD have been hiring field application engineers hand over fist to help with developing and deploying those platforms. And it sounds like AMD has grown that segment now. Now they've got 100 new or refreshed platforms in development, but I fully suspect that they're still hiring. So if you are an FAE and you're interested in working with AMD, go hit them up. I do take issue here with refresh Milan system platforms, because it's my understanding that they're socket compatible with Rome. So when you say refresh Milan platform, that's an updated BIOS and put a new CPU in, which takes 5 minutes when the BIOS is done. How long the BIOS takes is always the question. In summary, our strong third quarter results and fourth quarter outlook demonstrate the acceleration in our business. We are successfully executing our strategies to drive best-in-class growth based on delivering leading-edge CPUs, GPUs, and differentiated solutions. Confident in our next generation Zen 3 CPUs, RDNA 2 GPUs, and CDNA accelerators. Ooh, CDNA accelerators. Here we have a mention of CDNA. Again, yeah, technical conferences coming up, enterprise conferences coming up. Maybe we'll hear more about that, if not in Q1. Believe can drive further share gains and growth in 2021 and beyond. So now turning to transaction, next decade, high-performance computing is increasing at the center of nearly every major trend shaping the future, whether it's in the cloud, at the edge, or intelligent end devices. Expect this to say noise about Xilinx. We are seeing increased demand for high-performance computing, which enables a host of new experiences and services. While CPUs and GPUs remain critical engines for those devices, we see demand growing for adaptive computing capabilities that can accelerate evolving workloads. That is why today I'm excited to outline the next leg of our journey with a strategic acquisition of Xilinx. There we go. Together we will create industry's high-performance computing leader and the partner of choice for the largest and most important technology companies. Xilinx is the ideal match for AMD. Before they announced it, I wasn't too sure. Now they have announced it, I'm still not that sure, but they do cover at least some of my concerns. But going into Xilinx, they are the industry's #1 provider of FPGAs, so field programmable gate arrays. If you want to emulate a circuit design, you can either do it purely in software, or you can design it on an FPGA, which is like configurable transistors. So you can design a circuit in an FPGA, and it'll essentially act like the circuit in real life, just at a higher level. So, I mean, it's higher power, it's less efficient, and lower frequency, but at least you get a decent idea of what the circuit will do and if the circuit is feasible. That's kind of what FPGAs do. Also, if you want to accelerate a workload, say you have a machine learning workload or a crypto workload that uses an algorithm that doesn't have a specific hardware accelerator, you can design that hardware accelerator in the FPGA, but you can also use that FPGA as the product to sell your accelerator. FPGAs are used in a lot of things. Very complicated to use, very high bar to entry, but very effective in a lot of markets. So FPGAs and adaptive SoCs. This is essentially FPGA plus CPU plus some hardened logic, and Xilinx announced their adaptive SoCs, last year, the year before? So if you hear names like Versal and Alveo, that's kind of what those are. So, they have ARM CPU cores, dedicated crypto engines, dedicated Ethernet, software programmability, but also hardware programmability, and a large chunk of, standard FPGA stuff. Xilinx is successfully executing multi-generation hardware and software roadmaps that extend that leadership. Xilinx is a technology leader. Beside core innovation in FPGAs and associated software design environments, they have industry-leading capabilities in SoC design, SerDes and high-speed I/O, mixed-signal radio frequency, advanced 2.5D and 3D silicon integration, so we're talking about interposers and stacking, and packaging, as well as targeted software stacks for key verticals. Xilinx also built deep strategic partnerships across a diverse set of growing markets. To be honest, I think this is one of the reasons why the acquisition has been made. We'll go into that in a bit. In 5G comms, data center, automotive, industrial, aerospace, and defense, Xilinx has established themselves as a strategic technology partner to a broad set of industry leaders. Lastly, Xilinx has a very strong business model characterized by long product life cycles. Xilinx is still creating FPGAs that are like 15 years old because they're just used in so diverse things, with a best-in-class gross margin profile and significant free cash flow generation. But yeah, we'll get into that as part of the coverage. As we bring AMD and Xilinx together, there are considerable product, technology, market, financial benefits. AMD will offer the strongest portfolio of high-performance and adaptive computing products in the industry, spanning leadership CPUs, GPUs, FPGAs, and adaptive SoCs. This will enable us to take a leadership position, accelerating a diverse set of emerging workloads from AI to smart networking and software-defined infrastructure. While our product portfolios are highly complementary, our approach to technology development is actually very similar. Both companies are laser-focused on leadership products and multi-generation architectures, modular SoCs, meaning chiplets. Xilinx does some chiplet designs with their ultra-scale FPGAs, leading-edge manufacturing and advanced packaging technologies. In manufacturing, apply learnings from AMD's early adoption and high-volume production ramp of advanced process nodes across Xilinx's products, such as FPGA stuff. In packaging, Xilinx has demonstrated leadership and significant IP in the 2.5D and 3D die stacking technologies. They're becoming increasingly important as Moore's law slows. Looking beyond hardware, we see opportunities to combine open-source software offerings. So imagine an AMD stack that also compiled to FPGA into a unified stack optimized to accelerate computing. By combining our efforts, we bring together two world-class engineering teams with the technology capability and scale to build even stronger products and solutions. From a market perspective, we will cover the most important markets and consumers in the world. We will have a combined TAM of 110 billion, so total addressable market. This means if they sold 100%, if they were the market leader and they were had a market share of 100% in all the markets that they play in, that would be $110 billion. Building on AMD's 80 billion TAM with additional 30 billion of very attractive Xilinx TAM. So despite the purchase of 35 billion, Xilinx currently plays in markets with a max 30 billion TAM. As we look at growth drivers in the 3 to 5 year time frame, we see significant revenue synergy opportunities that can build on AMD's strong organic growth. In the data center, our EPYC processors have a strong foundation with the largest hyperscale cloud providers, also gaining significant momentum with enterprise customers and playing a leading role in supercomputing, where our products are powering the world's most powerful exascale computers. Xilinx is also investing significantly in the data center. We leadership in networking, computing, and storage technologies, notably with significant SmartNIC wins with global hyperscalers. SmartNIC is basically when you're transferring data across the data center, sometimes you want to do work on that data, like crypto or other stuff, or some machine learning based on the data. Normally, you'd have to dedicate CPU cores to that. So if you had a 32-core CPU, you might end up using 8 of those cores to just do the data analytics on the network traffic. With a SmartNIC, you essentially do that on the network controller itself, and you can free up those CPU cores for more general-purpose compute. Same thing with GPU and stuff. Together, we will be a stronger strategic force powering the next-generation data center. To drive longer-term, our processors in the telecom, edge, industrial networking markets, where we have a nascent process presence today, we can offer solutions that combine CPU and GPU with Xilinx's flexible accelerators, SmartNICs, software stacks, and domain expertise. For additional levels of performance on critical workloads. In telecom, for instance, where Xilinx has solutions, capabilities, and relationships with industry leaders such as Samsung and Ericsson, we will now have an accelerated path to market to better address the largely untapped 5 billion market opportunity for EPYC. Financially, the acquisition diversifies revenue streams and is expected to immediately be accretive to margins, earnings per share, and free cash flow. So what this kind of says is Xilinx is already deployed in a lot of areas that either just use ARM plus Xilinx or Intel plus Xilinx. Now Xilinx and AMD can go into those markets where AMD hasn't had any visibility with those customers before, and turn around and say, well, we'll sell you an AMD plus Xilinx solution. And we have the combined software stack, and we have the right synergies to do that, which is kind of what Intel wanted to do with Altera. One could argue if that has worked. So now culture. For the last several years, AMD has collaborated with Xilinx as a close partner. Had a chance to know Victor and his leadership team. I've actually interviewed Victor. He's a really nice guy. I can unequivocally say that Xilinx's team is one of the best in the industry, and thrilled to welcome them to AMD. Both AMD and Xilinx share a common culture focused in innovation, execution, and collaborating deeply with customers. Every merger says that, or every acquisition says that. From a leadership standpoint, Victor and I have a shared vision of where we can take high performance and adaptive computing in the future. Extremely happy he will be joining AMD as president, responsible for the Xilinx business and strategic growth initiatives after the deal closes. To be honest, I think that's just as important. I think Victor's going to be tasked with the case of, okay, you know Xilinx's business in and out, where can we shovel AMD? And now onto the CFO for the financial results. A lot of this were covered. We're going to go into this with the slides, with cash flow. So I want to highlight this here. Based on the trailing 12 months, the two companies combined would have a revenue of $11.6 billion, gross margin of 51%, so that's up from AMD's 45%, operating profit of approximately 21%, AMD was 15%, and generated approximately $1.8 billion of free cash flow, up from AMD's, was it $340 million? The balance sheet of the combined company will be very strong, with low leverage and an investment-grade profile. On a combined basis, as the most recent quarter of both companies, the total cash balance is $4.9 billion, and debt is $2.4 billion. Most of that will be Xilinx's debt. Gross leverage of 0.85. So transaction structure. At close, Xilinx shareholders will receive 1.7234 shares of AMD for each common share of Xilinx. This represents $143 per share of Xilinx. I think Xilinx was up to $88 per share, up 10% after this was made. Based on AMD's 10-day trading period, up to including October 8th. The ownership would be 74% for AMD shareholders, 26% for Xilinx shareholders. A lot of people will see this, this is diluting AMD shareholders. It is a little bit, in a sense that, like I said, that $35 billion, you're not actually adding $35 billion of value to the company, because you're essentially paying over the odds to invest in a company, or to acquire the company. So it is kind of a dilution in that front, but the idea is that combined, the company can go further because there's a combined TAM out there, and Xilinx has strong gross margins. We currently expect the acquisition to close by end of year calendar 2021. So we're actually, over a year away from this deal actually closing, subject to required approvals and other customary closing conditions. Until then, the two companies remain separate and will operate independently. But like I said, the share price will kind of be in lockstep there. As far as I understand it, the deal's been approved by both sets of board of directors. Now it just requires both sets of shareholders' approval, and also regulatory approval. Our acquisition of Xilinx is additive to our financial model and expected to result in meaningful revenue synergistic opportunities over the long term. That's a lot of buzzwords. And now here's Victor. Let me start by echoing Lisa's enthusiasm about the combination of two premier semiconductor companies and many opportunities it will create for customers, employees, and shareholders. Exponential growth of unstructured data, rapid expansion of connected devices, and plethora of data-intensive applications with embedded AI are driving the need for more efficient, high-performance computing solutions. AMD and Xilinx together will accelerate our ability to define this new era of computing by providing the most comprehensive product portfolio and computing solutions. In wide range of intelligent applications, largest data center to the edge to the smallest endpoint. By smallest endpoint, they're talking about base stations here. 5G base stations, expanded product portfolio together with industry-leading engineering capabilities and market expertise. Companies share the same vision for transforming people's lives through high-performance computing. New chapter of innovation. Excited about the future of the combined company and accelerating our opportunities. Is the same or the same thing. For Xilinx shareholders, this transaction provides a great opportunity for long-term value creation given the significant diversification benefits through an exposure to a broader and much larger growth business. So just to be clear, Xilinx's play here is pretty much exclusively for the data center, and enterprise and embedded and those verticals that aren't the consumer market. I believe there's a slide in the slide deck which kind of says this, but yeah, don't expect to see Xilinx in being paired with Ryzen or with standard Radeon stuff anytime soon. Lisa, to sum up, we are very pleased with the acceleration of our business in the third quarter. On track to deliver significant annual revenue growth this year, and have never been more confident in our trajectory. Acquisition of Xilinx is compelling for all stakeholders with significant value creation for AMD. Xilinx shareholders who will benefit from future growth and upside potential. We've always been very ambitious for our goals. Acquisition of Xilinx is a natural next step in our journey. Okay. Now let's go on to the actual PDF with the results. So financial results, going back to again, this is bump, industry-leading IP, advanced technology, PC gaming solutions, best ever product portfolio, Ryzen Mobile, Ryzen Threadripper, Radeon, EPYC, add in some Zen 3 and add in some RX6000 series. This is a slide we saw at the beginning. Like I say, AMD didn't do an infographic this time around. So, excuse me, sorry, talking a lot. Computing and graphics segment Q3 2020. Revenue of 1.67 billion, up 31% year on year, up 22% quarter on quarter. Client processor average selling price lower year on year due to higher mix of mobile processor sales. Oh, so okay, higher mix, that means just a higher percentage of mobile processor sales. Client processor ASP higher quarter on quarter, driven by higher desktop and mobile processor ASPs. So even though the mobile processor ASPs are higher, because the mobile processors are a bigger percentage of the combined average selling price, the actual average selling price of the combined is down, if that makes sense. Operating income of 384 million, up 205 million year on year and 184 million quarter on quarter. Record quarterly client processor revenue driven by highest ever quarterly mobile processor unit shipments. So this plays into higher mix of mobile processor sales. Number of AMD-based commercial and gaming notebooks each more than doubled year on year. Ryzen 5000 desktop processors with Zen 3, Radeon RX6000 GPUs with RDNA 2 graphics coming in Q4. Enterprise and embedded and semi-custom, revenue of 1.13 billion, up 116% year on year and 101% quarter on quarter, due to higher semi-custom product sales and increased EPYC processor sales. Now, when EPYC came along, AMD kind of made it as if, big grand vision for this stuff. I don't know, maybe I was expecting higher quarterly revenue. It's if AMD's going to take the enterprise market by storm, I think Intel's data center market is somewhere around the region of 8 billion, or maybe with the Xeon processors it's slightly less because they also add in everything else enterprisey into that. So yeah, if AMD is going to be a big player in there and start taking significant 20, 30, 40% market share in that, we're going to have to see that increase to 3-4 billion per quarter. Place your bets now on when you think that will happen. Operating income of 141 million on EESC. So even though revenue of 1.13 billion, operating income of 141 million, that seems a bit low, I guess. Strategic news and highlights. Record quarterly server processor revenue. Sales more than doubled year on year, as we should expect, because Rome was better received, more well received than Naples. On track to begin shipments of next generation Milan, with select customers getting it in Q4 and then general availability in Q1. Ramp production of consoles. Expect semi-custom shipments and revenue to increase in Q4 based on strong demand. And then I guess in Q1 and Q2 we'll start to see Milan appearing not in those numbers. So revenue trend from Q4 18 to Q3 20, so the last 2 years. I will point out that this graph does not start at 0. Bad AMD, bad, because it looks like a massive jump here when it's not as big of a jump. I mean, it's still sizable. I mean, AMD went up to Q4, then down, up, and then, if they followed that trend, I mean, they said they're guiding for Q4 revenue of 3 billion plus minus 100. So, and then gross margin trend going from 38 up to 46, down to 44, and they're expecting 44, 45 in Q4 and for the whole of end of the year. Earnings per share, up quite substantially, and then trending for non-GAAP numbers. Here's that table that we saw before, along with the 225% net income increase. And then segment results. Again, these are the actual numbers. Wonder whether we're going to see. Oh, okay, here we go. So cash equivalents and short-term investments there's that 1.7 billion number. That's gone up year on year, 562 million. Inventories have gone up by a quarter year on year. So that's interesting. Total debt is down 2/3 from last year. I always ask AMD, now that you're generating so much money, when are you going to start paying down debt? And the answer is always, well, I mean, the real answer is, well, it depends how much that debt costs us. If the debt is cheap, then obviously we're not going to pay it off. We don't need to pay it off as soon as, and we just keep the cash flow for investments. But debt's obviously starting to come out now. And then total debt net, again, down quite considerably. Total cash balance, solid net cash position, up to 1.7 billion now. And obviously, that would be more, if they weren't paying off this debt, and the debt's going down quite a lot. So I expect the total cash balance to go up, or, R&D spending to go up. And then, Q4 2020 financial year outlook, 3 billion, gross margin 45%, operating expenses 750 million, taxes 30 million, 3%, and then shares about the same. And then, successive education, and then here are some more numbers. And then we've got, the official news release. You can see it on AMD's website, but it says the same stuff that we've gone over. Then in terms of the acquisition of Xilinx, that's what I believe, AMD to acquire Xilinx. This is the presentation they put out, but they didn't really go through. So future of high-performance computing, enhances portfolio, expands AMD's data center business. So specifically going for the data center business with this acquisition. This is nothing to do with Ryzen, and this is nothing to do with Radeon. Leading provider, Xilinx is a leading provider of adaptive computing solutions, increases the TAM to 110 billion, immediately adds to AMD's margins, cash flow, and EPS, all stock transaction with combined enterprise value of approximately 135 billion. So complementary technologies, AMD talking about GPU, CPU, and then semi-custom and partnerships. And then this is where Xilinx's strengths lie: 5G data center, automotive, broadcast, consumer, aerospace and defense, industrial, and TME. I don't know what TME is. So Xilinx, best-in-class franchise, 3 billion sales per year. So here we go: data center 11%. Aerospace and industrial 45%, automotive, broadcast, consumer 16%, wired and wireless, communication is 29%. FPGA market share, Xilinx is the market leader with 54%. You got Intel+Altera with 32%, and then others, which is the minor FPGAs like Lattice and NXP and stuff, 14%. Revenue split: FPGA is 77% of the revenue, and the adaptive SoC is 23%. 4,800 patents, and operating cash flow of 1.2 billion. So Xilinx has got almost as much cash as AMD has. Interesting. Driving platform transformation with adaptive SoCs. So here we have this adaptive cloud adaptive compute acceleration platform. I think it is ACAP, which is where the Versal product name comes in. So the total TAM, total addressable market for this combined company: data center 45 billion, PCs 32 billion, embedded 21 billion, gaming 12 billion. I assume that they're lumping in automotive and 5G and stuff like that, either in data center or embedded. So here's a scale. AMD 6.7 billion revenue in 2019. AMD Xilinx 11.6 billion. So, almost doubling our revenue there. Complementary technology leadership. So here we go. Here's the Xilinx Versal RDNA 2 Zen 3. Advanced packaging, so chiplets, stacking, interconnect, interposers. Both Xilinx and AMD are strong partners with TSMC, so I'm sure that'll just continue in the future. Then data center innovation. This is where CPU, GPU, SmartNIC, AMD's going to try and obviously do the complete package solution for customers, and hopefully a top-to-bottom software. And yeah, here we go. Software enablement. Open source software co-designed with hardware and optimized performance across heterogeneous solutions. Both AMD and Xilinx were lead partners for heterogeneous system architecture. You remember the HSA stuff that AMD was going on about several years ago? So R&D scale to accelerate innovation. AMD currently spends 1.8 billion on R&D. Xilinx spends about 50% of that, so we've got a plus 50% total, which doesn't actually change anything, should point out. They're still spending just as much as they did. Then here we go, the world-class engineers, 13K. So what's that? It's AMD has about 9K of that, and Xilinx has about 4K, or maybe a bit different. Then, leadership, multi-generational roadmaps, best-in-class stacking and packaging, leading AI engines and domain-specific architectures, best-of-breed unified software platform. I think software is going to be the complex one for these two companies to sort out, to be honest. Leadership, x86 CPU, adaptive acceleration, and then CDNA compute. So, you might, because AMD's going down the chiplet route with its enterprise stuff, I can fully expect perhaps you can get a future processor with an FPGA chiplet on. That might be a semi-custom solution. Here we go. Here we go with the strong product portfolio. So here's confirming that all of Xilinx's products are more focused towards data center, communications, and embedded. Don't worry about Ryzen and Radeon. This isn't part of that deal. Customer relationships, and obviously AMD plays with a lot of these, and Xilinx plays with a lot of these, and basically they just come together and say, hey, you use our stuff, why don't you use our other stuff now? And that's going to be what it is, driving adoption of SmartNICs and Xilinx comms, and then shoveling EPYCs into where Xilinx plays and shoveling Xilinx into where EPYCs plays. Standard way. So here we go. Revenue. Combined 11.6 billion, as we said. So gross profit, AMD 3.8 billion with a margin of 44%. Xilinx is just over half that, but with a much better margin percentage, 69%, because FPGAs are expensive. So combined, they'll have a gross margin of 51%. Operating income, again, margin will come up, and then cash provided by operating activities. AMD's lower cash than Xilinx, but yeah. AMD is still committed. So AMD, back in their investor day, said that they believe that the company is on a 20% year-on-year growth strategy. So CAGR is compound annual growth rate, 20% year-on-year. And the idea is that even with Xilinx involved, they're still going to continue that 20% CAGR, even though Xilinx isn't necessarily, growing at the same rate. 300 million COGS and OPEX synergies. So combined operational gross savings, I believe. So basically, when two companies merge or one acquires another, there are common elements to both companies that you don't need. So say marketing, you don't need as many marketing people, and maybe you don't need as many sales people. Or maybe, you have one group working on DDR5 IP and another group working on DDR5 IP, and you don't need two groups doing it. So yeah, there will be some savings and redundancies, and AMD seem to imply that these are mostly towards, the marketing and sales and that side of the business rather than in research. But it's, every company, the idea is, hey, we can reduce your overheads. Financial profile. So this is the non-GAAP numbers. So strong capital structure, debt and cash. AMD has 400 million of debt, but 1.8 billion of cash. Xilinx has 2 billion of debt, but 3.1 billion of cash. So combined, there's 2.4 billion of debt and 4.9 billion of cash. So AMD's currently in a very net cash positive position, whereas Xilinx by comparison isn't. So, it'll end up roughly the same here. Mind you, if AMD grows, that can obviously be paid off quite quickly. But they're going to have to wait until obviously it closes before that happens, unless they do other deals and what have you. And here's everything summed up. 35 billion, 1.7234 shares, and then this 74-26 ownership split. Victor Peng, Xilinx CEO, to join as president responsible for Xilinx business and strategic growth initiatives, and then at least 2 Xilinx directors to join AMD's board of directors. So AMD's board of directors is going to expand. Expected to close calendar year end 2021. AMD Xilinx shareholder approval required, and then regulatory approvals and other customary conditions. Broadest high performance and adaptive computing product portfolio in history, best in class FPGA, adaptive SoC, software platform, combined strengths in PC gaming, which doesn't matter for this combination, data center with Xilinx leadership position in all the markets that we said before, and then TAM of 110 billion, 20% CAGR, creates a premier growth franchise. And then we get some more of this, and then, more numbers. And then here's the press release to go along with that. So after this call, obviously a lot of the financial analysts have questions because they need to put the numbers into their models, because that's how they earn their money. And here's just an overview of the Q&A. AMD 20% growth, compound annual growth rate. Does that apply when you add Xilinx? Lisa Su said the base business is great. The strength of the results and updated guidance shows this. Strong product driving momentum. 20% CAGR stays on track with AMD and remains a high growth business. Xilinx is additive to that model, and 20% is the right target for the combined business. Feel good about organic growth and growth initiatives. And then obviously Victor Peng's going to be involved in that. Server revenue doubled year over year. Intel results were disappointing. As we saw in the Intel financials, government and engineering was down 47%. Data center was down 25% year on year in the fourth quarter. AMD set to release Milan and CDNA. So what does this do to AMD? Basically, Intel said that they had a bad quarter. AMD is saying they're not having a bad quarter. So what does the fact that you have a good quarter and you're about to launch new products mean to AMD? So Lisa Su says, data center is important to us. We perform very well. Double percentage points year on year. Good momentum across cloud, hyperscaler, enterprise, and more platforms. Excuse me. Overall data center environment is as good as we go into Q4. Shipments will begin in cloud and high performance computing, and OEMs are preparing to launch Milan in Q1. It's a customer-specific message. Some customers will ramp Rome further, while others will transition from Rome to Milan. So that depends on the size of the OEM and the customer. Milan is very strong. It's coming in as we expected. That means performance. There'll be a strong translation into TCO server products. We'll talk more as we go through Q4. Data center business continues to be strategic and performs well for AMD. Here's another question. Raising the second half sales growth by 600 million. This is in the financials. The question is how much of this is coming from PC or enterprise or semi-custom. So Lisa Su says core business is doing very well. PC market environment is very strong. We're seeing working from home and schooling from home trends, which has helped in sales numbers. On top of this, Ryzen 4000 APUs are doing very well. As we saw, ASPs of the mobile processors are up and also shipments are up. Strong traction in areas we hadn't been in before, such as gaming commercial. Ramping game consoles in the second half, and demand has been strong. Servers performed well too. Gaming graphics will grow sequentially in Q4. So that's just more gaming graphics sales, but also RX6000 will go into those numbers. Combination of momentum and cycles. Supply situation's improved as demand has improved. There'll be another question on supply later. We aim to satisfy as much as possible. If you see some spelling errors, it's because this was literally typed as people were speaking. So sorry about that. So question here about server. So, last time AMD was out in the financials, they said they had reached 10% server market. Is the next 10% easier or more difficult? AMD is Milan soon, and Intel is Ice Lake. There's a lot of hand-to-hand combat every quarter, especially as products get launched very close together. How do we see the journey of AMD's server business? Lisa Su says that AMD's made a load of progress. They have leadership performance and TCO, so total cost of ownership. So if you factor in the cost of purchasing the system, plus also running the system over its lifetime, that's total cost of ownership. Rome has seen broad adoption in cloud, enterprise, HPC. We think Milan is even better. The mantra to customers has been a strong roadmap that delivers, which is a good thing in an environment where one might argue that Intel hasn't had that strong a roadmap by comparison. The traction for Milan has been stronger than Rome. We're working harder with customers to ramp as fast as possible. We're seeing broader cloud adoption, faster cloud adoption. The Zen 3 single-threaded performance really rounds out the portfolio. We're focused on data center now and as a combined company. This is interesting because you could argue this means that Zen 3 was a data center core first and a consumer core second. To be honest, I still think AMD sees the next wave of revenue growth in the data center in enterprise. So that will probably continue. With the Xilinx markets, comfortable with 20% compound annual growth rate. We've heard about Xilinx's targets. What about AMD's combined idea for the CAGR over the next 3 to 5 years? So AMD's core business, we feel very good about growth in PC and gaming and data center. Our portfolio is very strong. As we add Xilinx, we both have made data center our strategic focus. Xilinx has made strong investments in data center, and AMD plus Xilinx is a strong proposition. Broad markets in comms, automotive, aerospace, defense are attractive markets for CPU plus GPU plus Xilinx. Market presence of Xilinx also helps with the ability to bring base AMD technology in there. There are lots of opportunities. Both businesses are executing very well, and we intend to keep it that way. We see revenue synergy in the 3 to 5 year range as portfolios come together. What are the market trends in client and server? Where will AMD be end of year, but also mid-21, end 21? Based on the third quarter performance, we do believe we'll gain share in both markets, both client and server. This is a journey, and the key for us is to execute well. Customer momentum is there. We plan to continue to delight our customers. So it'll be interesting to see how well Ryzen and Radeon sell by the end of the year and into the next. This is Stacy Raskin from Bernstein. He asked the next 2 questions. In Q4, you're saying plus 41% year-on-year guidance, which is up from the 32% guidance at the start of the year. Can you keep that growth into Q1, Q2 as work from home perhaps levels out? So the idea is that as the current situation becomes less of an issue, more people go back to work in an office. Strong demand for us right now in the first half of 2021. It's a bit early to be specific, but we believe that some market phenomena is in play here, but also AMD has specific product gains. Notebook portfolio has never been better. The strength of the new platforms has come up. desktop products with Ryzen 5000, and the first year of console cycle is always a bit different. We'll see some strong demand there. Right in the middle of launch in Milan, we feel good about growth in the first half, and we get more into it as we finish 2020 and Q4 results, end of year results. So Stacy also asks, Intel tried Altera, but wasn't terribly successful. How is the AMD plus Xilinx vision different? What lessons can you learn from Intel's deal? So Lisa says, we've been thinking about this for some time, as in the acquisition, and AMD believes that this is a different situation to Intel's. Xilinx is the market leader. Both companies are executing really well. Why now? We feel very good about our base businesses. Our businesses are very complementary from a product and market standpoint. Yeah. But our key intersections are in the data center. Also, technology leadership strategy, the modular design, the TSMC relationship, and the TSMC packaging, and the software and open source strategies. Lots of under-the-cover synergies. We'll see this as roadmaps execute. The cultures are also very aligned. Lisa and Victor are both engineers at heart, in comparison to having a CFO. Bold vision of what we think we can do for the industry as joint companies. We're not doing mergers and acquisitions for the sake of doing mergers and acquisitions. It's a unique opportunity, and there's no better match for us in the industry. Victor comes in and says it's completely different to Intel and Altera. Very common vision for the transition, not only for data center, but also edge and endpoint too. Super excited to join back with AMD, because Victor used to work for AMD. And we do have very similar cultures of innovation and execution. Strong teamwork within and with customers, create tremendous value for customers. Personally, I'm all in. So when Intel purchased Altera, that was for what, 16 billion? 18 billion in 2015? So this is costing AMD at least double what Intel paid for Altera. As a result, they're getting the market leader that has 54% of all FPGAs. So next question. So computing at the edge, lots of talk about base stations, especially as 5G is deployed. As you think about delivering AMD plus Xilinx solutions, does the edge platform architecture differ from the core data center? And is there a value proposition for AMD plus Xilinx compared to other solutions, such as ARM plus Xilinx, or Intel plus Xilinx, or Intel plus Altera, or PSG, they call it Programmable Solutions Group. So Lisa says there's a strong portfolio between CPU, GPU, FPGA, and adaptive SoCs. So this is essentially going to be AMD's new product areas moving forward. That product focus, that portfolio lends a lot of solution capability when looking to specific workloads. On accelerators, we have been investing in GPUs and Instinct, focus on training on high-performance computing. Victor's focus is on edge. A common software environment is important to accelerate use in the market. So the idea is that you develop in the data center, you deploy on the edge, and you can use the same software for both. We'll have a basket of technology from the infrastructure cloud side and endpoints. Victor says there are more elements for real-time responses and low latency enabled by these solutions. Workloads are different and need customization. This is where AMD plus Xilinx can handle customizations real-time. But for high-performance compute, putting the two together with software will provide comprehensive, powerful solutions, even at edge, the endpoint, and cloud. So in the base stations, Intel obviously has a Snow Ridge 5G SoC, and perhaps the idea is, especially because you need configurable radios in those sorts of environments, either in development or as you create them and you move them and you deploy them in different areas of the world. The idea is that you have high-performance AMD cores in the mix with the Xilinx reconfigurable side for the RF radios, and then that all ties in together. And that's the idea of having some synergy rather than saying relying on an external ARM chip to do it or what have you. So question, level of integration of AMD and Xilinx. To what is the integration happening on the hardware in the vision versus the software? FPGA plus CPU plus GPU integrated on monolithic or interposers, or architecture with Infinity Fabric, as an example. So Lisa says the days of monolithic integration are probably over. Chiplet is the right way to move forward. Xilinx is very advanced in this area. There will be some opportunities on the hardware side, but likely to be more market-specific optimization on what customers need. Software is key, doubling down on this to accelerate adoption. Ultimately, the value is in the combined solution. So what Lisa is saying here is, on the hardware side, they're probably not going to do AMD plus Xilinx monolithic hardware solutions. You'll probably see chiplet solutions. And that's probably the way to go here. because it means they can use, different process nodes. And they can do also, so imagine you had a Rome CPU today and you replaced 2 or 4 or 6 of the chiplets with FPGA modules connected with Infinity Fabric, that sort of thing. AMD claims $300 million in cost savings in 18 months. Where does this come from? What are the priorities? So Lisa says a scale of bringing the two companies together, opportunity on the COGS side, public functions, etc. They're continuing to grow R&D. There will be some synergy on some of the IP sides that the companies both use, but that will allow them to invest more in R&D, not counting on any major changes on either side of the business. Both companies are executing very well, and they're going to keep it that way. The synergies are more on the COGS and the public company type stuff. So it almost sounds like two companies working together, but one owns the other. So here's a question: data center opportunities and the timing of CDNA. Basically, when is CDNA coming? Lisa says, hear more about CDNA here in a couple, and then she pauses and says in a month or two. Was Supercomputing Conference is 3rd week of November? So we're about a month away from that. You never know. That would align with month or two. Gaming and cloud opportunities continue to ramp. Large high-performance computing opportunities come into play in 2021. And some of those wins will be announced. Question: ramp on the gaming side has incurred more costs than expected. As I said, some of the costs have gone up. Gaming as a percentage of mix, and Q3 is the first gaming quarter, tends to be the lowest quarter. September is usually gross margin month. How should we see this as a low gross margin month? How should we see this as a full picture? So Lisa says they ramped console heavily in third quarter, so they're seeing sequential gross margin, quarter-on-quarter uptick in gross margin. Console will grow, but is actually margin decretive. But other businesses are growing. Early console ramp issues are usual, but they're working through, and demand is still strong. So they're working on satisfying all of the demand. I think we'll go into demand, in a couple of questions. So here's a question on data center and communications. What's AMD's view on industrial and automotive? Bucket for automotive? I can't remember what they said there. Distribution channel at Xilinx, but not AMD. Is the opportunity for AMD with this distribution channel that Xilinx has. Lisa says the synergy on data center and communications. Xilinx's core market business is a wonderful business. Like I said, the 5 to 10, 15 year life cycles, and there's a wide range of diverse customers that AMD doesn't currently play with. Very happy with adding that to the portfolio. It adds a different rhythm to the business. AMD is cognizant that it is a different business, and the two companies will remain roughly as they are. Victor says a lot of opportunities for AMD in automotive, domain controllers, powerful compute, and sensor fusion with a Xilinx plus AMD solution. Xilinx has 2 decades of experience to help AMD's integrate into those new markets, which is kind of half the reason for the whole thing to happen anyway. Here's a question on fab capacity. Understand it's better in the second half of 2020. What about as we move into 2021 and AMD on 5 nanometer? How does that look? Lisa says second half capacity at TSMC has been stronger than originally planned. Works closely with suppliers to improve availability. Demand still exceeds supply in certain segments. This is probably a nod to consoles. They're still obviously making console chips. It'll be interesting to see how well they can deploy Zen 3 in Ryzen 5000 and next generation EPYC Milan, and then also Big Navi in Radeon RX 6000. In 2021, planning for success, working across supply chain so we have enough wafer capacity and back-end capacity. Supply chain is important to actually get these things to market. There are areas where we would like supply to be higher. We're working on that. We believe we will have the ability to support strong growth goals. So when Lisa says they're working closely to improve availability, and then this question up here saying incurred more costs than expected, it's our understanding that if you have an order with TSMC and you pay more money, then you can be bumped up in preference of other customers. So perhaps AMD is just paying a little bit more to make sure that they have enough volume, which would be preferred rather than having less volume, and the idea is that total revenue goes up and then total profit goes up. You have to decide where you want to spend that money, basically. And TSMC won't ever go into whatever layers of whether you're a bronze customer, gold customer, titanium customer, or anything like that. And apparently there are layers within layers, and it all gets very, very complicated. From what I've heard, nothing confirmed. Question: Xilinx has a CUDA-like software environment. How does this play with AMD? Lisa agrees that Xilinx is strong. AMD has the ROCm platform, which they'll bring together. And Victor says that Xilinx and AMD have been partners in things like ROCm and this heterogeneous system architecture for many years. Question: enterprise embedded semi-custom guidance in third quarter. How are you looking at semi-custom relative to EPYC? What is the landscape seeing? So Lisa says there's a strong semi-custom environment. Usually Q3 is peak for EESC, but they'll also see sequential growth into Q4 as a result of the product space. So, Milan and consoles. The competitive environment is about the same. Our focus has been on product strategy and working with our customers. Lots of excitement about Milan, ramping faster than when we ramped Rome. Final question here on the role of SmartNICs and how portfolios will be emerging. Will Xilinx be embedding some of AMD's core capabilities in that market? So will we see a versatile ACAP with a Zen 3 core, basically? Lisa says, SmartNIC acceleration tech has been very important. Xilinx has made significant investments, additive to AMD's portfolio. Currently engaged with top hyperscalers and opportunities in enterprise too. Relationships with top customers can accelerate some of the solution development. Victor says AMD is leading with core density, and what the SmartNIC does is offload some of those cores to help deliver a better overall solution for those that need those cores. This is what I was saying earlier with if you have data coming in to your server and you need to use 8 of your 32 cores to do additional processing, machine learning, crypto on that data, it's best just to offload that into a SmartNIC rather than have it run on the CPU, so you can free up the CPU for other things like, instances and stuff, or compute. Lisa and Victor didn't necessarily answer the question, because the question was like, well, will we see, Zen cores on one of these SmartNICs? And to be honest, I don't think that's what the end goal here is, unless SmartNICs move into a chiplet route. And then, you could arguably say that we'll see, take a Zen 2 or a Zen 3 chiplet being an 8-core attached to a SmartNIC. Excuse me. But that obviously increases power and what have you. And there we kind of have it. That is all of AMD's presentation elements, and I realise that this video has gone on, for over an hour and 15 minutes. Acquisition of Xilinx. I can definitely see value in AMD and Xilinx saying, well, Xilinx plays in these 12 markets where AMD doesn't have visibility, and we see opportunity for AMD to sell EPYC processors in those markets, which obviously generate value for AMD. Doesn't necessarily generate value for Xilinx. So you have to wonder whether the idea moving forward is Xilinx is going to grow as it has been, steadily. It's going to remain market leader. It's going to continue to develop its own products and focus in that space. And the value that the acquisition brings to AMD is just the ability to be introduced to those customers that play in that space where it hasn't had visibility, but also develop AMD plus Xilinx solutions. At least say, well, you buy a Rome or a Milan server and you get a few, Xilinx FPGA accelerators as well, rather than using, Intel or an ARM-based server. Which would, it's just a direction to sell more EPYC CPUs, which is necessarily a good idea, though you could arguably do that with a company partnership rather than, say, an acquisition. I mean, even as an all-stock acquisition. Though as an acquisition, you obviously all bring it in-house, and then you can kind of signify that from one point of view. It also stops other companies coming along and acquiring that FPGA maker. I mean, there are obviously lots of parallels here to the Intel+Altera merger, where you now have Intel's Programmable Solutions Group basically being the ex-Altera business. And it took a long, long while before we saw anything out of that Programmable Solutions Group be seen as kind of like next generation Altera stuff. I mean, on the Altera side, the idea was, well, okay, let's stop using TSMC for Altera's products on your 16 nanometer, and let's bring them into Intel on 14 nanometer and Intel 10 nanometer. I mean, Intel also had an issue at the time where not all the fabs were at 100% capacity, so arguably they were losing money. And the idea is that if you bring in somebody like an Altera, then you can kind of fill your fab space with FPGAs and sell that to those customers. I think one of the issues that went wrong there, two issues went wrong with that merger, I think. One is they, rather than moving everything to 14 before they moved everything to 10, they went straight in with 10. That's why we're only starting to see the first Agilex FPGAs from, that were designed as part after the merger, starting to come to market as of last year. Whereas all the Stratix stuff is still based at TSMC. And so they integrated Altera into Intel very quickly. I mean, as in, you are all under the Intel, boot, as it were. All under the Intel hammer. And as a result, it kind of lost its identity. I mean, you still had the Altera, the code names, but it was, Intel Stratix and Intel Agilex rather than Altera. And it kind of removed Altera from its marketing limelight, and they kind of very quickly went behind the scenes. I mean, I know people who worked at Altera before the acquisition suddenly became my main PR contacts for the data center business at Intel. It's two reasons why that didn't work. AMD and Xilinx keep, as part of this series of announcements, have said they want to essentially stay independent apart from where opportunities where they can collaborate arise. That may arguably be a better deal for them. Xilinx already heavily uses TSMC, so I don't see a problem there. Obviously, integration with some of the packaging technologies. You might see a unified packaging team between AMD and Xilinx. That could very well be a thing. And obviously, they have to help co-design their EDA tools with whoever the EDA tool vendors are to help with TSMC's 3D Fabric, their SoIC, and their CoWoS technologies. Yeah, I can see that happening. Will this accelerate AMD's push to, more interposers, more chip stacking? Arguably, I don't think so, if they're planning to keep the companies kind of as separate as they are. Obviously, with these sorts of things, it's all about finding the right market for when these sorts of technologies will interact. But as we've seen with the Radeon RX6000 launch, none of those graphics chips in consumer, none of them have HBM anymore. It's all back to a GDDR interface. I mean, yes, Infinity Cache and what have you. I wonder if that Infinity Cache is going to be a stacked chip in future. We'll see. However, yeah, you got to wonder where AMD is going to sit with packaging, whether we're going to see more advanced packaging in EPYC, and whether the whole AMD and Xilinx thing is going to come together in that way. I mean, I mentioned replacing chiplets with perhaps FPGA or adaptive SoC type chiplets. That could happen. I mean, this deal isn't closing until the end of 2021, which means that there probably won't be any combined AMD Xilinx products until maybe 2023 at the earliest. Now, there will be combined AMD Xilinx solutions for sure. I mean, that's what I think is the whole point of this merger more than anything else. But yeah, if it does look like an Intel+Altera merger, I think the one thing that would keep it from being that way is if AMD lets Xilinx retain being Xilinx, and they just do the combined synergistic integration a lot slower, and just identify where, the product portfolio enables solutions, AMD plus Xilinx solutions, rather than an AMD plus Xilinx product, and just start down that road and go a lot slower than what Intel did. Mind you, when Intel integrated Altera, it suddenly went very slowly because of the whole 10 nanometer issue. Yeah, and I think the whole AMD Xilinx merger won't have to go beyond that. Won't have the same challenges in that way. But a lot of people have said, well, arguably this is, you're diluting the AMD shares, so you're reducing the value for shareholders. And last time AMD did a big acquisition like this, it was with ATI, and it almost bankrupted the company. Though again, you could argue that without ATI, we wouldn't have AMD today. I don't think that's the case. If AMD and Xilinx stay kind of as those separate companies under the same name, basically, like Samsung has Samsung Smart Mobile, and Samsung dishwashers, and Samsung white goods, Samsung Defense, Samsung Storage. They're essentially different companies all under the same umbrella. If AMD keeps their core CPU GPU business and the Xilinx business as separate, then yeah, it can work, and that's arguably the best way in which it will work. I don't know. I've reached out to Xilinx actually to see if I get a few words with Victor as a result of this announcement. They turned around to me and said, AMD's in control of Victor's schedule, so we don't know necessarily what interview he's doing or what time of day. But if they do find a spot and they do know what he's doing, then perhaps I'll get a chance to speak to him. And it'll be interesting, to see if he sees it in the same way I do, I guess, from my perspective. And then there also could be an argument, because AMD is such a leading edge partner with TSMC, perhaps we'll see some Xilinx products move to more leading edge, depending on how those markets might prefer, say, 7 nanometer FPGAs. So that's going to be more interesting. On the financials, obviously AMD going up is a good thing for AMD. It means that they can reinvest. I'm glad the fact that they're paying down their debt, because obviously at one point there was more debt in the company than there were assets, which was worrying. But now that's all sorted. That's coming down. Still waiting to see for that, sizable growth in the enterprise segment. The numbers are a bit bolstered, I guess, right now because of the console market and all the sales there that have happened this quarter and going to happen next quarter as well. As AMD ramps Milan, if same Zen 3 plus 19%, it's going to be interesting to see all the different kind of separate enterprise tweaks that AMD has for those Milan processors. I mean, and then obviously after Milan we have Genoa, and we expect that to have PCIe 5 and DDR5 and a new socket and whatever they're going to announce with that. But I think if AMD can execute in Milan, Zen 3, and I fully expect us to have all those hyperscaler and HPC deployments. We're actually really looking forward to CDNA, to hear what they have to say about CDNA. As you might know, my background was kind of in GPU compute before I did journalism, so it'll be interesting to see what they're doing on that front, and how they've made a compute accelerator not look like a GPU in that way, where the acceleration lies and what optimizations they have. And then obviously we'll see that contributing to the EESC revenue later as well. I mentioned we just saw the announcement of Radeon RX6000, the Big Navi, next generation graphics, and AMD says that they're competing at the high end again. They look like they have a very price competitive product. We still want to see numbers on performance and performance versus power, especially versus NVIDIA, and also a case of where AMD is going to stand with Ryzen and Radeon. Ryzen 5000 series plus the RX6000, which is actually interesting. Let me see if I can bring it up. If you are a follower of me on Twitter, then I produced a poll recently. So yeah, the idea is if you're going to build a system, say end of the year, based on all the announcements and based on all the data that you've seen, what kind of system would it be? And the results are like this. Currently, we've had 1,600 votes, 1,700 votes in 3 hours, and AMD CPU, AMD GPU is winning. That being said, Twitter is very AMD fanboy heavy. Sizable AMD CPU and NVIDIA GPU. I've seen a lot of people comment saying that they trust NVIDIA's driver stack over AMD's driver stack. Also, NVIDIA has a lot of extra features like RTX voice and what have you. It's still strong with the Intel CPU plus NVIDIA GPU. People who want Intel are going to buy Intel, and it seems like they actually outnumber. I guess because Intel and AMD have been natural rivals for so long, they won't necessarily pair the Intel CPU with the AMD GPU. I mean, still 1.7% of the votes. But as Intel launches its own GPUs, I wonder if that's going to become less of a contentious issue in combination. So that I think is quite interesting. And I think, let's kind of wrap it up there. I mean, this has been fun. Financials is always fun, seeing where the money's going, see where they think the money's going, and what kind of areas of these businesses are growing, declining, and then a little bit touch a roadmap and a little bit of information on the CDNA. November's gonna be full of reviews. Stay tuned for that. You'll see a lot of those online, and maybe you might see my thoughts on a few of them.